Hi, now you are familiar with various financial indicators which are used by the stakeholders of the business to know about the financial health of the company. In this video, I'm going to help you establish further that these indicators are in fact actually used by the company and the external parties as well. In order to do that, we are going to look at the annual report of Reliance Industries Limited and see if they make use of any of the terms, any of the indicators that we have discussed. So let's get started. This is the table of content of the annual report of Reliance Industries Limited for the financial year 2018 and 19. We have been using this report in this course extensively. We are first of all going to look at key performance indicators. You look at any annual report of the company, you will find largely that these topics have been addressed in the annual report. So there are key performance indicators first of all which we are going to look at. So we go to page number 4 and this is what we see. Now notice that this is the largest company in India and they are showing their key performance indicators. Which are the indicators which they deem to be important to be disclosed to public? The first indicator is called turnover. What is turnover? As we discussed, turnover is the revenue of the company, the sales of the company. So this is the first most important indicator, of course. So it has been going up. This is financial year 14-15, 15-16 and so on. This is the financial year 18-19 and these numbers show that the turnover of the company has gone up and it has been going up continuously for last 3 years. The next the next indicator is profit after tax. Well, do you know what is profit after tax? Yes, you do. This is net profit after the taxes. Again, this number is going up. So now you know what this indicator means. The next indicator is earnings per share. Do you remember earnings per share? EPS. From the profitability indicators, profitability ratios, EPS is being shown here. The EPS is not actually in a very good position for this company. They had a big drop in earnings per share in the financial year 17-18, but it has recovered compared to the previous financial year. So there you go. Earning per share is something that we are already familiar with. You have the earning per share is the earnings available to the equity shareholders divided by the total number of equity shares issued by the company. So these are profit and loss metrics. So this section shows profit and loss of the company, key indicators which the company thinks are important. Of course, there are other indicators which are shown in the balance sheet as well. Let us now look at the second set of indicators which has been shown by the company. These are called balance sheet metrics. From the balance sheet, we know now the company is going to talk about assets and liabilities that they have. The first item is net worth. Now, net worth is something that we've not discussed explicitly, but you already know what net worth is. Net worth essentially is the shareholders' funds. Shareholder funds. Net worth is a very common word which is used in the news or otherwise as well in the business world. What net worth means is for any company, this is the balance sheet. Now in the balance sheet you have equity, you have non-current liabilities and current liabilities. And on the other side you have non-current assets and current assets. Both sides have a total which is equal. Let's say this. Alright. Now what is net worth of the business is, if you pay off all the liabilities that exist in the business, then what is the money that you will be left with? Okay. Now what is it that you have to pay? You have to pay these two external stakeholders, non-current liabilities and current liabilities. How are you going to pay for that? You are going to pay for that by selling off your non-current assets and converting your current assets into cash. After you sell your assets, how much money are you going to get? According to the balance sheet, you are going to get 100. And then how much do you need to pay to non-current liabilities and current liabilities? Let's say this is 30 and let's say this is 20. So total money that needs to be paid to these external stakeholders is 50. So what you are left with is 50. What is this 50? This is the value of the equity. This is what belongs to the owners of the business. This is the net worth of the business. We know it by the name of shareholders funds. So there you go. Net worth is something that you already knew. It has been just reframed. A different word is being used, but now you know that as well. Next up is debt to equity ratio. Well, you very well know what debt is and what equity is. Debt to equity ratio has the ratio between this and this number, external liabilities and the internal liabilities. And for this company, this ratio has been going down. It has been going down year on year. All right. Then you have book value per share. Again, this is something that we have not discussed, but you actually know. It's very simple. I told you that there are some basic principles you need to know, basic ratios, indicators that you need to know, and then everything else is just derivation of that. It's just based upon what we have learned. So book value per share is nothing but the net worth or the shareholder fund divided by the number of equity shares. Equity shares. There you go. That's the book value per share as against the market value per share. So this book value per share is going up compared to last year, but there have been better book values, higher book values in the past. So these are the balance sheet metrics which the company has disclosed on page number 4. This is the front of the annual report. These numbers are supposed to be very important for this company. All right. And you already knew 1, 2, 3, 4 of them directly, and 2 of them you knew, but I helped you understand how to work with these. Let's go to the final section on the key performance indicators. You have something called shareholders metrics. What are these? The first metric is market capitalization. What is market capitalization? Again, this is something which is used in the news articles, in the business parlance very often. The market capital is nothing but the market price per share, which you are already aware of, multiplied by the number of shares which the company has. There you go. You already knew what these two things are. Multiply these two and you have market capitalization. Now, as against the capital invested in the business, which is here equity, capital invested in the business, that is on the book value. In the books of accounts, what is the value of the money invested in versus what is the value of the shares in the market. So these two are contrasting terms. The market capitalization refers to the price of the share in the market multiplied by number of the shares. So this market capitalization has gone up significantly in the past few years for this company. Done. Let's go on to the last indicator in the shareholders metrics. This is called dividend per share. Well, you already know about dividend per share. This is the dividend declared to equity divided by the number of equity shares in the company. Dividend per share again has experienced a significant drop since last 2 years, but compared to previous year, it has gone up slightly. So this is the front page, the page 4 here of the Reliance Industries Limited, and you see that of these 8 indicators you were already aware of 5, and remaining you knew indirectly. So I'm not talking in the air. You know all of these things. We've discussed all of these things. Okay, let me further take you to another section in the annual report. So we've looked at key performance indicators. Immediately after that, you have letter to the shareholders. This letter here is written by Mr. Mukesh Ambani to the shareholders, addressing all the shareholders. And let me just read through some of the text, selected text. To the purpose is to indicate to you that these ratios, these indicators, these terms that are being used in the financial reports, you know them. You can read through these terms. Okay, let me first look at this section. In the first paragraph, there are some terms being used. Let me zoom into it. This is what this text says. Now, there's a lot of other text, but I want you to focus on this term here. So he says consumer business witnessed phenomenal growth in terms of revenues and profitability, with Reliance Retail and Jio now collectively contributing nearly 25% of the consolidated segment EBITDA. Now, what is this? This is called EBITDA. EBITDA, EBITDA. You're already aware of the first four letters here, EBIT, earning before interest and tax. In addition to that, we have added two more letters, DA, which means depreciation and amortization. Now, let me use the income statement, for example, and then you have cost of goods sold, you have employee benefit expenses, then you can have depreciation, then you have the finance cost, depreciation and amortization. I'll clarify what this means. Then you have tax, and then finally you have net profit after taxes. So cost of goods sold, let's assume 50, employee benefit expenses, amortization, finance cost, tax, and then you have your net profit, which comes out to be 2575. So 25 is the net profit, for example. So we know what is earning before interest and tax. Earning before interest and tax would be that you look at only up to this. This is the interest and this is the tax. Do not deduct these from the profit. So if you do that, then you have EBIT which is equal to 35, right? These two fives have to be added back. Or you can just deduct from the 100, 50, 10 and 5. So 65, you're left with 35. This is earning before interest and tax. If you have to calculate earning before interest tax, depreciation and amortization, all you have to do is not consider this 5, only go up till this point. So you will have an EBITDA of 30. The reason of using this number is the company wants to indicate that the EBIT, although is the total earning of the company, after which the earning is distributed to the lenders and to the shareholders, the depreciation and amortization, these two items, and depreciation is on fixed assets, amortization is on intangible assets. Intangible assets are patents, trademarks, copyrights. So depreciation which is charged on intangible assets is called amortization. So just a different name for depreciation. So do not worry too much about what is amortization. Okay, so these are the two terms. So now we are saying that depreciation and amortization are not paid to anybody. So this cash is in the business. This is just a non-cash expense which the tax authorities allow us to deduct before we calculate the tax amount. Therefore, they are showing a beta because that is the cash that they receive, cash profit that they receive, that they earn during the year. Hence, this number is significant. So now earning before interest, tax, depreciation, and amortization. What does it mean? Okay, let us move forward. Let me look at another paragraph. Let me zoom in. This is the text. It talks about some things and then says net profit. Net profit of this much. We know net profit means net profit after taxes. So what this jargon, these terms are used with a very very specific technical meaning. Somebody who has not gone through this course, has not undergone this discussion, would generally assume that incomes minus expenses is profit, but the net profit means that you've taken out the finance costs, the taxes, all the rest of expenses as well. So again, you are aware of this term very well. Further, let me look at another paragraph in detail there. And you have this word turnover. What is turnover? Turnover is the sale. We've done a lot of turnover ratios as well, efficiency ratios as well. The word turnover refers to sales of goods and services by a company. And here it says Reliance business continues to scale new heights, achieve 2 important milestones during the year. Number one is crossing the turnover mark of 1 lakh crore and the store count of 10,000. So turnover, whenever used, we know it is referring to the sale. Again, I'm emphasizing that you are now familiar with these terms. Even the owners of biggest companies in India are using these terms, and you can now more easily read these statements and know what it means. Okay, there is a following page to this address, and there is another paragraph which I'm going to zoom in. And here it says the refining and marketing segment reported a decrease of 19.8% year on year, which means compared to previous year in EBIT. Well, earning before interest and taxes. This you already know. All right. So I'm not going into details of what this paragraph means. What is this margin environment and all those things, because those words are sector specific, related to petrochemical industry or oil and gas industry. So that's not the purpose. The purpose of this discussion is to show you that the financial terms being used, you are familiar with those. All right. So, in the annual report, you can further go to a page on financial highlights. Till now, we have looked at page number 4 and page number 6. Now, in the financial highlights, company gives more details. So, there are financial highlights of Reliance. Standalone means, Reliance has multiple subsidiary companies in which Reliance has invested. You look results of the whole group, you call it consolidated result. I'm looking at Reliance's standalone, only Reliance company's interest results, not its subsidiaries. So there are two sections to it. You have some key numbers here, and then some indicators, some ratios after that. Let us first look at these numbers. So what do you have here? Now, of all of this list, I bet you know 90% of the items already, and if not 100. So value of sales and services, well, you know it. Value of sale and services includes the market price, the number of units sold multiplied by the price at which they are sold, and the price also includes the tax, the GST that is collected by the company. The total income, on the other hand, includes the value of the services minus the GST, the actual income, plus the other incomes, the non-operating incomes that the company has. So this is the total income. You have taken out the GST amount. That's why this number is lower than this number. Okay. Then you have earnings before depreciation, interest, and tax. So now again, earlier Mr. Mukesh Ambani had used EBITDA. This term, now they are using it differently. So all I'm saying is, do not get bogged down by different fancy terms or acronyms being used. This means the same thing. Earning before depreciation, finance cost, and tax expenses, same thing as the EBITDA. So it's just that the acronyms have been moved here and there. Then you have the amount of depreciation. You know this. Profit for the year is the net profit. Equity dividend percentage. This is the percentage dividend which is paid to the equity shareholders. Again, we know this. Dividend payout is something which we have not discussed. Dividend payout simply means the dividend which is declared or which is paid out as a percentage of the earnings which were available. Earnings available to equity shareholders, to equity. That's it. So dividend payout has a specific meaning. You are going to pay out the dividend from where? From the earnings available to equity shareholders. How do you figure out the earnings available to equity shareholders? You have the net profit after tax, and you take out from it the dividend to be paid to preference shares, and you have the earnings available to equity. Out of this, the board of the company will pay out some part, let's say 50% of the earnings available to the equity shareholders are being disbursed, are being distributed as dividend to the equity shareholder. That is what is dividend payout ratio. Again, nothing fancy. We already know how do you find out the dividend declare and what are the earnings. So you can just divide those numbers. Again, another variation of this can be you have dividend per share, and you divide it by earning per share, same number. So basically, numerator and denominator both are being divided by number of shares. So using both the ways, you can figure out dividend payout ratio. So this was one ratio which you did not know. You know what is equity share capital. You know what are reserves and surpluses. Net worth is equal to shareholder fund. We've discussed this earlier in this video. Gross fixed asset does not include depreciation, so it's the cost price of the assets. Net fixed asset is the gross fixed asset minus the depreciation. Total asset is the total of the balance sheet. Market capitalization is the number of shares multiplied the market price per share. We have discussed that before. Number of employees and contribution to exchequer is the tax that you pay in different ways. Alright, there you go. The key indicators, out of the key indicators, you did not know what? Only one. That's it. You knew all the rest of the indicators. Okay, now there was the second section on the ratio. So let's look at that now here. In this section, you have earnings per share. Do you know what is EPS? Yes, you do. Then you have excluding exceptional items. So just ignore this again. Some advanced items. Maybe if I can address it quickly. There can be some items which are not regular to the course of the business. So you take out those items. You show actually those items in the income statement. We've not looked at that section yet, so I'm not going into that much detail. Okay, next is turnover per share. Now, what is this turnover per share? We've not heard of it. Turnover is the sale. You divide it by number of shares, and you have turnover per share, right? Pick any number. Current assets per share, debtors per share, cash available per share. So you could do any of those numbers as long as it makes sense. So turnover per share, you can figure it out very easily. Book value per share is equal to the shareholder funds divided by number of shares. We have discussed this earlier as well, or this is also called net worth per share. Okay. Then you have debt to equity ratio. You very well know it. You have EBIT divided by gross turnover. All right, just divide it by the sale number to say what percentage of the total revenue finally translates into earning before depreciation, interest, and tax. That's what it means. Net profit margin is the net profit ratio. That's it. Just slightly different, name is being used. Then you have return on net worth. So let me bring it here. Return on net worth. What is net worth? Net worth is shareholders' funds. So you're talking about return on shareholders' funds. And in the previous videos, we spoke about return on investment. And the investment was from the point of view of equity shareholders. And equity shareholders invest the shareholder funds. So these three mean the same. So the nomenclature can vary, but the components, essentially remain the same. Then you have return on capital employed. We've discussed this. Capital employed, let me take it here. Capital employed means shareholder funds plus the non-current liabilities. All the long-term funds taken together, you use these as the base to figure out the profits, to figure out the percentage margin on this base. That's it. So you knew all these numbers. So even in this section in the annual report, you were familiar with most of these except for one which I've explained to you. Let's move on to another section which is called management review, and management of the company is now doing some discussions on the financials and presenting some analysis. Let's look at the numbers that they are presenting. Here is this is how the page looks like. We are going to zoom into this section here. Okay, what are they presenting? They are presenting consolidated and standalone both. So don't be bothered about what is consolidated and standalone. Let's look at only consolidated for now. So they show sales, fine, we know it. Now they're using P instead of E. Does not matter. Earnings, profit before interest, depreciation, and tax. Earning means the same thing. EBDIT can be the same thing. Now, a new thing is cash profit. What is cash profit? Now, cash profit means that you are going to use sales and you are going to take out from this the expenses, all right, but only cash expenses, not the expenses which have not been paid. When we talk about cash flow statement, we will discuss, we will know how to calculate cash profit. So I'll defer this discussion to later when we talk about cash flow statement, which is another way of analyzing the financial statements. Then you have segment EBIT. We know what is EBIT. Segment refers to different segments that the company, business segments that the company has. So not necessarily a financial term. Net profit, we know. Cash and marketable securities, we know this is a current asset. Marketable securities refer to the investments of the company which can be sold readily and converted into cash. Then you have tangible and intangible assets. There you go, you know all of these things. You have gross debt. Debt refers to the non-current liabilities, all the loans taken together. Now to go along with these, there is some commentary which you can read through, and they are referring to only these numbers. The interpretation again is a deeper discussion on what are they writing here? Is that correct? Can you question that, and so on? That is something you develop over a period of time. But what you learn in this course is the definition of these technical terms which are being used. Okay, if you go to the next page, they also talk about, in the same analysis discussion that is being presented by the management, they talk about the other incomes, and they talk about some exceptional items because these may not be regular incomes of the business. So these are shown as well. Then you have finance cost. We know what are finance costs. These are the interest expenses on the loans taken by the business, and it says that 16,495 crore against the previous year, which means the finance cost has gone up. The increase was primarily on account of commencement of digital services of business, digital service business, petrochemical projects at Jamnagar, and higher loan balances. They've taken more loans. They're explaining the reasons of changes in some of these items. Depreciation, now they're giving details of what all was in depreciation. You have EPS, and now they're using basic EPS. So there are two terms, basic EPS and diluted EPS. Again, I do not want you to get confused there. Ignore it for the time being. Once you're comfortable with these terms, then you can read up more, and it's not going to be difficult to distinguish between basic and diluted. But little advanced discussion for this course. Then you have dividend, which was recommended 6.5 rupee per equity share of 10H. Well, we know about all of these things. Fixed assets are given, and yeah, this is consolidated, so they are adding their subsidiaries assets as well. Anyways, okay, so that's it. We have looked at the annual report, and we've looked at 3-4 sections, and in all the sections we know 90% of the content, 90% of the terms, financial terms being used by the owners of the company, the board, the management team of the company. Well, you are all set to read these statements and evaluate and verify your understanding on your own. Okay, let me answer one more question in this video, which is, all right, the annual reports are using these terms, but if I go to business websites, will I see these terms? Yes, you will. So I went to businessstandard.com, and I looked for Reliance Industry Limited's profile, and then I got these numbers. You could do just Google Business Standard. You go there, you have a search box, you put in Reliance Industries Limited, and you'll have these details. So on any of such similar websites, what you see is these are items picked up from the final accounts, the income statement and the balance sheet. You are familiar with all these terms. Operating profit. Operating profit is something that we learned during the analysis of the statements. But rest of the things, net worth again, shareholders' funds, we know about this. And then finally, they have some ratios that they've shown. Operating profit margin, you know it. Net profit margin, earnings per share, dividend percentage, dividend payout, all these terms. So yes, the business websites will also show you the similar numbers. Okay, now let's talk about the news articles. Do news articles also talk about these numbers? So I'm going to pick up one recent article here. So I have it here. I have a article from the Economic Times which says Q4 results. Q4 refers to quarter 4. This is the fourth quarter of the financial year 2019-20. So this past it's March 31st 2020 is the quarter 4 ending. So the title says profit plunges 39% year on year to this much amount and misses street estimate. Street refers to the stock markets. Dalal Street basically refers to the stock market. So news people will either glorify or use very fancy terms, which you will pick up as if you continue to read such articles. But let's look at what this means. So, Reliance Industries on Thursday reported year-on-year fall in the consolidated net profit. We know what is consolidated, we know what is net profit. For the quarter, okay, fine. Analysis, so Economic Times analysis has projected a different, profit figure, so that's why they are shocked. Next up, they say financial period ended. Okay, fine. Consolidated revenue of the company. We know what is the revenue of the company. Reliance Industry Company also announced India's biggest right issue. Right issue is the issue of shares, but again, an advanced topic. I'm not going to touch upon that in this course. Let's ignore this. Let's move on to the further paragraphs to see if they are using these terms. Gross refining margins. So refining refers to their business segment, which is refineries. Gross margins in the refinery segment, they have improved. We know what are gross margins. We're talking about gross profit here. And next up, you have the firm recommended a dividend per equity share. So we know what dividend per share is. And then you have, okay, let's move forward. Again, they report net profit. We know what net profit is. Alright, subscriber base is not a financial number, so we'll just move forward. Then you have outstanding debt. Outstanding means something which is to be paid. Debt means the non-current liabilities. So again, these numbers are not something that we do not know of. Cash and cash equivalents are the absolute liquid assets. Cash balance, bank balance, marketable securities. So you know this as well. Then you have okay, segment wise breakdown, and they are talking about year on year growth in the revenues. Yeah, so nothing so fancy. Actually, news articles, if you see, are less technical unless they are reporting a specific issue. So they will talk about some, they'll use some words from specific to the industry, specific to the economy, and then make a commentary on net profits. On they're not even going to EBIT either. So the bottom line is that all of these terms. Now you should be comfortable reading the annual reports of the company, which are more technical compared to the news articles in the press. All right, let me stop here. I'll see you in the next video.